Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today is Monday, so we have what we call Macro Monday here at xChange. We typically look at the week ahead and what kind of mostly macroeconomic indicators and data points we can expect and are to be watched this week, including what the expected impact is on the container trading and leasing market. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. So today, data has already been released earlier this morning, at least CET time. China inflation rate, particularly the consumer inflation rate, continues to be on a downward trend now, 0.4% year on year versus 0.4% forecasted. And then also the producer purchase index severely negative at minus 2.8% year over year. So really also here continuing to show deflationary pressures on the Chinese economy. Then on Tuesday, we also have data from China, some trade data expected to show some uptick in imports, 1% year on year, and continued strong export figures, roughly 7% year on year. Especially that import growth is of course, on the watch for the Chinese government, looking at the domestic economy in particular, and how consumer spending develops there. And then on Tuesday too, we have the German economic sentiment, so the ZEW economic indicator expected to fall further, putting increasing pressure on the ECB to cut interest rates faster, which will then hopefully, likely happen on Thursday, where we have the ECB rate decision. And this one is very interesting. We just had last month, we had an interest rate cut by 25 basis points of the main deposit facility rate. Another cut now in October was almost unthinkable. Everybody looked at the November decision, didn't think that anything would happen in October. Now, over the past 3-4 weeks, this picture has turned significantly, almost like 180 degrees, where now most market observers expect another 25 basis point cut by the ECB. And that just shows how dynamic the picture is evolving, especially here in Europe, Germany and Europe, with regards to our economic situation. And we're really struggling. There's a recession, a mild recession happening right now. And of course, the ECB is under pressure to cut rates further to support the economy. And of course, any interest rate cut also has some relief for container traders and leasing companies, because it reduces the financing costs of the assets. And most likely also put support on the container prices. And then on Friday, we have even more data from China. So you see, really, this is a Chinese week, so to speak. We have more data from China, particularly industrial production and retail sales developments, both very likely confirming a weaker economic situation. And it remains to be seen what else the Chinese government will be doing in terms of fiscal policy to support the economy. Now, that's it from us for today. So quite a few very interesting indicators to be released this week. So stay tuned and talk to you all on Wednesday. See you then.